Good morning, everyone. Thank you for joining us this morning for our webinar. We're very lucky to have Vikas from the Sheffield Steel from Kenya, who will be talking on unraveling the concept of ghost kitchens. We're very conscious we're bang on time, so what we like to do at the start is just kind of give a few minutes just to let people kind of log in and get kind of set up. As most people know, that no meetings generally start bang on time in Kenya, so it's good to give a few minutes just to let people rock up. But Vikas, just informally, like, are you well? How is everything?
Everything is good. As I told you earlier, I'm stuck in India as flights are banned. So kind of I'll have to wait for another 14 days. By the time that ban is lifted, I should be able to get back to Nairobi and work actively in the space.
Yeah, and I mean there are certain places in the world to be stuck, and India right now is
Yeah,
um,
it is actually one of the worst place to get stuck in.
yeah, yeah. I mean, do you have family there? Are you staying with family at least?
Yes, I am
Okay,
staying with my family. In fact, the purpose I came back to India was to bring my family back to Nairobi.
okay.
But as luck had it, so I don't know.
Yeah. Well, at
Yeah,
least you're with kind of family rather than stuck in
that's
hotels
true.
and
That's true.
things. Like
That's true. Yes, yes, and that's even worse. I mean, I know getting back to Kenya, then going through that 14 days quarantine period in a hotel is going to be even more challenging.
yeah, yeah. It's
Yeah,
I think being stuck in a hotel. I'm not sure which
right.
hotels they have, but they're kind of I'm sure they've got a range of some nicer than others, I'm sure.
Yes, yes, they do.
But yeah. Anyway, just quickly to kind of set the scene for everyone. Firstly, I hope everyone's well and in as good as spirits. I think the lockdown or the restrictions in Nairobi are slightly changed, which is good. I myself, just to be just very honest, I'm based in the UK. I work with our team in Kenya. We have an office in Nairobi, and I work very closely with them, coming and going on an airplane, but not as often, obviously, in the last 12 months as I would hope. Um, but we are the Montgomery Group, so we are organisers of trade exhibitions and events based all over the world, with our head office in London, but a team and an office as well in Nairobi. In Karen. That team is run by Angela, who some of you may know, who's lovely and runs the promotion and events that we have out of Nairobi. One of which is the Kenya Hospitality Show event and the Kenya Food event, which are kind of topics. Obviously related to Sheffield and what they do, and that's how we've got to know them over the past few years. Um, we were due to run our event in April last year. Then we were hoping that September last year we'd be able to do it again, and then April again this year. But obviously, restrictions don't allow us to do it as we wish. So we're now back in September this year with all fingers crossed and very confident as well that everything will be able to run as planned. But in the meantime, we've been kind of running a series of webinars across the whole group, across our global group, and I think we've run over 150 webinars now. And it's really a way to kind of try and stay connected with what's changing in the world and in the space, both directly with the pandemic, but also indirectly with the way that just general things do adapt and change over time. And we always want to stay connected and stay talking to the kind of the community and the hospitality community in this sense. Just a quick kind of intro on the platform. The first thing, we obviously it's an internet based platform, so do trust that the internet will last. If your internet is slow, then there's a little cog at the bottom of the screen. Um, and that cog will enable you to change your kind of video settings. It might automatically be on HD, which might buffer or stream, but you can kind of try and bring that down to 720 if the connection is poor, and that might help your internet cope. There's also a chat feature on the right hand side. Do make comments, do say hi, do let us know where you're from. Feel free to ask any questions in here as well. There are a question panel at the bottom, and you can ask questions there as well, and we'll get to those in due course if there are any that kind of are suitable. But yeah, in without further ado, I'll hand over to Vikas from Sheffield Steel. He can introduce himself in more detail, and then we look forward to hearing what I have to say. It will be about a 30-minute presentation, give or take, with a time for questions afterwards. But Vikas, thank you from behalf of Montgomery Group for talking. It's great to have you. We had Suresh as well, kind of in a previous session. It was great to have him. And yeah, we appreciate your words and look forward to your kind of what you have to say.
Thank you so much for having here, Alex. I think it is a great opportunity to share, what we think about industry uh, in terms of the latest business innovations which are happening. And glad to be connected to the audience, especially during this time when we are not able to participate in any of the exhibitions, as those are not taking place anymore. Uh, let's wait for the best period to come back, return in terms of our businesses, in terms of your businesses, which allows players like Sheffield to kind of connect with the audience. I should start now sharing my screen so that we begin with the presentation. Hi, Alex, you can confirm if you're able to see my screen.
Yeah, that's all there.
Okay.
If you just make it kind of large, then
All
it's
right.
perfect. Yes.
Okay, that's great. So thank you everyone who has joined us. I think it's very difficult time for all of us to get stuck in the kind of space we are in right now. And I'm glad that you have taken time out of your busy schedules to to come and learn something about a concept called ghost kitchens. So I will begin with little introduction about our company. I represent a company called Sheffield, which is the leading firm in space of facility solutions in the East Africa. So Sheffield is brainchild of a visionary founder called Mr. Suresh Kanotra. It's only because of his vision for food and beverage industry and Kenya and Africa at large, Sheffield is where it is today. Sheffield, as we look at it now, is East Africa's leading facility and equipment solution provider in the space of food service. It serves a lot of industry segments like hospitality, healthcare, institutional, corporate industry, and has presence in Rwanda, Tanzania, and Uganda. So, but we are not limited as far as project executions are concerned only across these countries. We have done project executions in Ethiopia, Burundi, South Sudan, Nigeria, Zambia, and many other countries as we progress. So, as in terms of areas of operation, we those started with commercial kitchen solutions when we began our journey about 18 years ago. We have expanded a lot in that space. In terms of adding new verticals, we have also added commercial laundry solutions to our portfolio. Last 3 years, we have added cold room division, which is doing very well in the space at present. And also because of the pandemic, healthcare industry is something which is on the boost. So we've also added healthcare industry to our portfolio. We've been very strong as far as customization solutions are concerned because we work with stainless steel fabrication. So we're able to customize a lot of equipment solutions for any type of industry that cuts across all type of industrial segments. A little bit about Sheffield in terms of what we have achieved so far. We've installed about 7,000 odd kitchens across Africa. That's roughly about 1.4 million square meters of space. In terms of it is almost equivalent to Vatican City in terms of area. There are about 70,000 professionals who are working in Sheffield installed kitchens. So that shows the kind of employment it has been able to generate. People who are interacting with our solutions on a daily basis. We are preparing about 250 meals on average. 250 million meals are being prepared every year in the kitchens installed by Sheffield. Sheffield is a kind of a company which believes a lot in providing training and knowledge, imparting knowledge to its customers. It has invested into a Sheffield Academy at our office. We conduct a lot of trainings, in-house trainings, and also conduct trainings at our customer sites. We believe in innovating concepts, bringing out innovative concepts. Every moment like pandemic like this gives us an opportunity to think laterally and come up with solutions which are going to work for specifically for the local market. I think that was foundation of our company's existence, that we wanted to bring out solutions which are specifically customized to African market rather than importing solutions or just simply relying on imported solutions which have been designed for other countries. Uh, Over a period of time, by bringing out more and more segments and doing more innovative products, we have now become a one-stop solution provider. Today, Sheffield is not just limited to providing equipment and fit outs. It is one-stop solution shop for everything. Today, entire restaurant, entire hotel, entire business setup can be done in terms of solution can be provided by Sheffield. So that is about Sheffield. Now let's start our topic for the today. Uh, we have been hearing these terms like ghost kitchens and cloud kitchens for last 2 years. Although these jargons existed, I think 3 to 4 years ago, it was already there in the space. But I think because of pandemic, it has become way more way more prominent. We are hearing it from different people, different types, different countries. So idea of starting this particular session, or getting into explaining this concept, was that let us try to bring everybody to the same page as far as understanding a ghost kitchen concept is concerned, because there are different types and models of ghost kitchens. Although topic is very large, if we have to cover a lot of technicalities into it, but given the time we have, I think it's best we first understand the basic concept. So let's talk about the terminology. So we hear ghost kitchens, cloud kitchens, dark kitchens, virtual kitchens, satellite kitchens. They're nothing but all the same. These are terms which are used interchangeably across. Even during my presentation, you will see me using somewhere cloud kitchens and ghost kitchens interchangeably. Primarily, what are these kitchens? They are delivery only restaurants. That is what typical ghost cloud kitchen, dark kitchen is. It only focuses at delivery only services as far as food space is concerned. According to Goldstein Market Intelligence Report, cloud kitchen industry globally was valued at 700 US dollars in 2018 and is expected to grow at a compounded annual growth rate of about 18% up till 2030. Now, before we jump into getting deeper into the cloud kitchen industry, let's look at why this has happened. There is a disruption which has happened in F&B space, which is called online food delivery, and this online food delivery as a concept is something which has caused eruption or disruption of concept called cloud kitchens. So online food delivery has been there since ages. We've seen Domino's and Pizza Huts and other models thriving into F&B space for a long time. They have been making deliveries, but the nature of deliveries used to be different. Earlier, we used to dial up through a phone call. Now those exist in an online app, or you can order from website. So that's the nature of online food delivery. If we see the data from 2011 till 2020, we see the ratio between the offline and online has been changing. We can say, okay, 2019 and 20, we see offline ratio going below the online ratio. It's primarily because of pandemic. Otherwise, I'm not sure if this would have continued at maybe a 40-60 kind of a split. But irrespectively, the overall online food delivery market or food delivery market per se has been growing. There is a growth curve, so it is growing at about 3.8% per annum rate. Uh, so overall, food delivery business is worth about 5 million, and because of the current situation, because of the people now becoming habituated with the online food delivery concept, it is expected to grow to about 365 billion by 2030. Now that's a huge number. I mean, we're talking about a $1 billion per day kind of an industry. Now, fast food is becoming a major trend, which is giving a boost to the online delivery concept. The key aspect which is causing this rise is the convenience which our customers looking for, and also the affordability. Because of this delivery concept, they're able to bring down the prices, the volumes are high, and since you are not charging them premium, which is otherwise charged for providing an ambience, so the cost of food comes down. So you're able to pass on that margin to the customer, and that's what I think the modern customer, or so-called millennials, are looking for. And with numbers like these, irrespective of COVID or not COVID, even tomorrow when we see that COVID is not around, we hope and we believe that these numbers are going to stay as it is, and online delivery is here to stay. Then this industry has also got a lot of boost from delivery apps, or these are also now called aggregators like Uber Eats and Grubhub, DoorDash, Glovo, Deliveroo, etc. This has become a phenomenon. Let's see what basically cloud kitchens are. As we said that these are basically delivery only outlets. They accept orders online. There is no dine in and take away concept in these, and they rely on online services in terms of order aggregation and in terms of deliveries. Whether they depend on the websites or mobile applications of provided by aggregators, or they have their own. And they take services of delivery fleet. And now delivery fleet can be an independent company, or it can be part of aggregators. Mostly these are part of aggregators, what we get to see these days. So this concept, like I mentioned, had originated a couple of years ago. It was already there before pandemic started. The reason this concept came into picture was because of high rents, and also people wanted to repurpose their space when they were off peak hours. The business was down, and we were still incurring high rentals on restaurants. So we wanted to use that space, and that's how this concept emerged out of the necessity of keeping your business profitable. Why cloud kitchens? Now, based on data, the food deliveries are bound to grow more than 3 times the rate of on-premise revenue, which is dine-in restaurant revenue, through 2023. Apart from that, high rentals and margins, which are going down every day, is also contributing to this growth. It is also considered economically profitable business to work with cloud kitchens. That is why you will see a lot of restaurants remodeling and deconstructing their existing models and shifting to a cloud kitchen concept rather than continuing with investment in a restaurant model or a dine-in model. Uh, Another reason for growth of this phenomenon is it requires a very low investment in comparison to a dine-in restaurant. So you're able to kind of venture in, you're able to take risk, and over and above, it takes lesser time, and primarily because of the lower investment, takes lesser time to achieve the break even, which is in most cases is less than a year. So it's a huge opportunity for the market, for F&B business to get into this concept, uh, because of various reasons. Like I said, the whole concept of staying at home and ordering food was already popular before even COVID started. Now people have become habituated, and they are going to choose to stay in, and instead of going out, they will prefer eating, as long as they get the convenience, as long as they get the good quality meals delivered at their doorstep. So we see rise of cloud kitchens. Uh, the convenience of this on-demand food delivery has resulted in creating more sales for restaurants. That's why restaurants are remodeling and venturing into this business. And also because of this whole nature of ecosystem, there are new businesses which are flourishing. There are new brands which never existed before are coming in. So now if you look at the palette, you are able to see a larger breadth of brands, a larger width of brands in terms of different cuisine type brands, or a completely new brand which you may not have heard of before. So there is a lot of experimentation which has become possible because of rise of cloud kitchens. And all these things have resulted in making cloud kitchen one of the fastest growing industries globally. Essential characteristics of cloud kitchen are typically there is no physical presence. So we're talking about a restaurant which does not have a physical presence. You don't have to go to a space where you will get to see that brand name. There is a minimal wastage. Now, minimal wastage is not just of food, but of resources. So you don't have a kitchen, you don't have a restaurant open, and if there are no people or if there are 50% turnout, you are only using your space for capacity of 50%. So cloud kitchen is somewhere able to address that problem. There is a lesser risk when you think about getting into this kind of business. Another option is that you're able to tweak your menu, which was a very difficult part earlier, because every time you want to experiment with a new menu item, you will have to think about including that in your menu, which is usually printed, and you will, people when they come and experiment and they like or dislike, then you will have to make those changes in the printed menu, and which does not exist in this case because your menu is online. So listing your new food items and removing them if they don't work is very easy. So it gives you scope of experimenting with your food. Also, it does not impact the brand image of your outlet. How cloud kitchen works? So generally, we will receive orders from customers. Those orders come to a central place. From there, they are distributed to respective outlets, respective kitchen outlets. Then meal is prepared at those outlets. It is packaged. Then it is parceled for delivery. So either by the aggregators or by a separate delivery fleet or by an owned delivery fleet, it is picked and delivered to the customer's doorstep. So USP of Cloud Kitchen is basically the lower operating cost and the startup expenses. If we have to look at the structure of this Cloud Kitchen, we know that it is delivery only. It accepts orders online. There is no dine-in facility. There is operation order preparation time is very less. It takes about 10 to 12 minutes. It's a high turnaround setup. It is usually located at a low cost area to have, say, lesser rentals in terms of overall cloud kitchen operations, and in a high demand area. So you can be in a very busy area, which is cluttered space. You can be in the back of the lanes instead of being in the main on the main road area and have lesser rentals. And but the overall area has a high demand in terms of food delivery. Delivery time is typically under 40 minutes, less than 40 minutes. At least that's the case in Indian context. Average order prices of the meals are lesser than your typical restaurant meals. It's a lower risk investment, and it's easy to expand with this kind of setup. Let's look at some of the advantages, although we have already talked about some of them. This requires lower infrastructure cost because we understand that any business in terms of restaurant requires an upfront decent amount of investment, and that is not only limited to kitchen, but it is also goes towards facilitating your seating space, your furniture, your other facilities which are around, plus staffing, because you have a back of a kitchen staffing plus front of a house staffing, waiting staff. So overall investment in a typical restaurant is huge, but in this case, the predominant investment, or you can say 90% or up to 95% of investment, is only in the kitchen space. So plus there is nothing fancy you need to do about it because nobody is going to visit that space. So you don't have to build fancy doors, don't have to look at some sort of artifacts to decorate the space. So this has a lower infrastructure cost. The next advantage we have is the scalability. Because the market is booming, it's probably the right time to get into this kind of a segment, and because it is going to see a tremendous amount of growth in the future, and because the kind of investment and the turnaround time to set up a shop is much lesser than setting up a restaurant, so it's easy to scale. So if in a traditional scenario, if you were planning to probably roll out about 8 different restaurants with something like cloud space, now you can start multiple outlets, or at least your order volume can be 3 times higher than the typical restaurant space. Now, Let's talk about overheads. If you were running a traditional restaurant, this would be eating into a lot of costs, even if the restaurant is not running, even if the customers are not turning up. You will have to pay rents, you'll have to maintain your electricity costs, and apart from that, there are other overhead costs which are bound to a particular place, a physical space of a restaurant. Now, in cloud kitchen, those overheads costs are very low or very minimal. So that is something which restaurants are able to manage. They're even able to get into an agreement where they use the cloud space, which is rented only for those many hours till they need to churn out a particular volume of food. So because your investment is revolving typically around building your kitchen, so it is considered as one-time investment. So you don't have to renovate after every 6 months, which you might typically have to do in case of a restaurant. You don't have to change any colors of the walls, bring new furnitures, try to give a newer feel to your setup. So it's like a one-time investment and you're done with it. Anything else apart from this you're doing is probably tweaking your menu, which is simpler, which doesn't require for you to change your equipment or change anything in terms of cost implications. Other advantage of this concept is that you're able to now capture a wider audience, because physical restaurant has a limitation in terms of the place where it exists. It can draw something from the kind of a catchment area which is around the restaurant. But in this case, because you're working with a delivery fleet, the reach is not limited. So you're able to grab wider audience, a wider target for your restaurant. With as I said, with time, cloud kitchen has been there, and with time, it has brought up different variations which are bound to happen. And there is still a lot of settling down to happen in this space, because I think it is evolving every day, and we might end up seeing new shades or new types of cloud kitchen business models. Then we're going to discuss in this particular presentation. So there are typically 6 popular type of cloud kitchens, like standalone single brand cloud kitchens. There's a virtual restaurant, there's multi-brand cloud kitchen, shared space cloud kitchen, aggregator managed cloud kitchens, operator managed cloud kitchens. We will delve into each of these. So a standalone or single brand cloud kitchen is one of the most popular type of cloud kitchens. It was easy for most of the brands to start this type, like they already existed. People have seen what Domino's does, so they easily ended up creating a separate dedicated kitchen which was only focused at delivery, which was only focused at online food management. And specifically during these times, we have seen that shift happening. So this is the most predominant type of cloud kitchen concept, which exists for a single brand, which is focusing on a particular type of cuisine. So it's not like you have a typical hotel kind of a restaurant where the menu is large. It can be a pizza shop like Domino's. It can be a burger shop like Big Burger. So it works on a typical uh, specialized cuisine. Can have maximum 10 to 15 items in the menu. Uh, so this is also a kind of a concept which works very well in a smaller footprint. So it's very easy to get into this. So we're looking at something like 300 square feet kind of a space. Then you can connect with multiple aggregators, and it works very well for the restaurants which are focused on a single theme or a concept. If you look at the economics of this type of kitchen, it can be operated at one third the cost, and also the turnaround time is much less. It gives you cost efficiency of about 25 to 30% than the regular dine-in restaurant of the same capacity. And it can be operated very easily with just a few cooks, about 2 to 3 cooks and few helpers. Now, downside of this model is because this model is very lean and you are totally dependent on aggregators. They tend to charge about 12 to 18% for the order management, and if you include the delivery along with it, it costs about 25 to 30% with the delivery included. So, if you look at the kind of volume, it depends. I mean, if the volume is very high, probably these numbers work well. That's why people prefer to get into this kind of concept. But this concept was already popular. So then there are new avenues which have flourished during last 2 years, which we're going to talk about subsequently. So, what type of restaurants should plan to get into this kind of space? So, if there is a first time restaurant which is looking at building their brand at this stage without having to invest much, and are also focused or specializing into a typical cuisine, and they're not looking at a very vast menu, should look at this option. Established chains also can jump into this if they are wanting to reach a newer area where they don't, without having to invest much, but they are not there in that region, so they can start with that. So earlier it could have been a stopgap kind of a arrangement before a restaurant would think about investing and putting in a, you know, a whole restaurant or dine-in setup. They can experiment with a cloud setup and then think, understand the viability of that particular place, and then invest into that. So, but now it is going to become standalone concept. As a standalone concept, it is going to become more prevalent than going with a dine-in concept. It can also be started by those restaurants who are already catering to online delivery, but their online delivery orders are very high, and they do not want their online delivery orders to impact their services for the regular dining. So they can hive this off to a single brand cloud kitchen concept. So a typical setup looks like this. It's a smaller 300 square feet kitchen space. You receive orders from multiple aggregators. They can be Glovo, they can be Yum Foods, they can be, say, Uber Eats, and then you are accordingly sending out those deliveries uh, uh, based on the order types. There's an example of a restaurant which I have taken from US. So Cousin Subs is a Chicago-based outlet for a fast casual food, and they have about 100 outlets. And in June 2019, they have started delivery-only outlets. And now, because of success of that outlet, the most of the outlets have been converted into, almost 85% of their existing outlets have been converted into home delivery outlets. So this is one example which is focused on a particular type of menu. They are specialized into subs, burgers. So they are our best example for a single brand or standalone cloud kitchens. Now, the next concept we're going to talk about is virtual restaurant cloud kitchens. So, because this, as the name suggests, the brand does not exist. It's a virtual brand. In the earlier case, it could be the same brand, like Domino's might have a dedicated, like Cousin Subs I have discussed, they can have a dedicated delivery only outlet, uh, but the same brand name. In this case, it's other way around. You are using the same space within the existing restaurant and churning out a different menu under a different brand. So that becomes a virtual restaurant cloud kitchen. So it is housed in the existing kitchen, existing restaurant. It has a different menu, and it gives you a flexibility of experimenting with new concepts, as I was talking earlier. So when you want to experiment with a new menu item, it's easy to do that under a new brand rather than doing it under your existing brand if you are owner of a dine-in restaurant. You can even use off-peak hours operations to create a menu for this new brand. So it is something which works very well for when you find a gap in the market, and you want to bridge that gap, but you're not sure about the success, then you would want to work something like this. And because you want to optimize on the space, the high rentals you are paying for those restaurant kitchens, you want to make best of it. So you want to use leaner operation hours to churn out more dishes. So as far as economics of this type are concerned, this is one of the highly profitable models because there is no upfront investment in this case. You're already owning a restaurant space. You're only using the existing kitchen space without having to add new staff or new kitchen equipment, and creating a new menu item out of this space and tying up with an aggregator focusing only on the online delivery model. He takes all the hassles of listing that menu item in the app, so it does not impact if things work or don't work. It does not impact your existing brand equity of the restaurant. So it's good for a lot of established players who want to experiment, and is also best for people who are looking at widening their customer base. So this example shows that you are looking at a same kitchen. There's a parent restaurant brand, so there can be existing brand orders, but then there are other orders which are only for the virtual brand and delivery uh, fleet, whether it is a separate delivery aggregator can be taken care of by them. Uber Eats is one of the largest companies in this space. So what they ended up doing is they invited their partners, restaurant partners for whom they were delivering meals. They asked them to give them space to create meals for the brands which Uber Eats created. So those brands were obviously exclusive to Uber Eats, and they have used about 4,000 kitchens to create these brands and serve meals across. So let's talk about multi-brand cloud kitchens concept. Now, difference between multi-brands cloud kitchen and the single standalone brand is that here you can experiment with the larger width of menu, and it works very well when you have a bigger cloud kitchen space, when you want to create a cloud kitchen concept as a business model. So we are talking about large kitchen infrastructure with multiple brands of the same company. So here the companies are not different. So what you're doing, you created a space which can which is giving you different type of meals. You would ideally want to do it that way by creating, so that your burger brand does not impact the equity of your pizza brand, but everything is getting prepared in the same kitchen. So it is best model for the cloud kitchen operator owners who are getting into a bigger cloud kitchen business operations. They're the ones who are floating these brands. These are completely virtual brands and multiple brands. So this space is about 1,800 to 3,000 square feet, is housing about 6 to 10 brands. So roughly about the same 300 square feet per brand, but that's not the case here because each brand does not have a separate kitchen. So it's a common bigger kitchen like a commissary kitchen of a hotel. And all orders are being processed centrally. So your staff is common, your chef is common. You might have the same chef who's working on all these different brand menu. So it's a common kitchen. So this works very well in terms of economies because your order volumes are high. You have already listed 6 to 10 brands on the aggregator site, and all these brands have different deliveries. People don't know they are coming from the same house or same kitchen, and the cost of operation comes down dramatically. And you are able to negotiate on the delivery cost if your delivery operation is separate, because you own the cloud kitchen space. You are dealing with an aggregator and who's managing the order management and also the delivery fleet. So average cost is roughly between 18 to 25% for this kind of setup, and it's very easy for a new brand uh, to be floated in this kind of setup. So you might have 6 brands, you might decide to do 7 brands. You might have within the pizza category, you have a brand A and brand 2. Brand 2 serves maybe a premium kind of a pizza. Brand A is a regular pizza. So it's a very flexible model when even you have to do a price differentiation within the same category of food. So the basic difference is that it's a larger setup than the single brand kitchen, and all the brands are virtual brands. So it is meant for cloud kitchen operators, and also if there are established restaurant brands. When I say restaurant brands, they are larger menu brands. They're not like Domino's and uh, uh, Burger King kind of brands, but they're larger restaurant brands. They have breadth of the menu, and they want uh, to get into this space. Creating more virtual brands under the same kitchen. So it's very easy for them to get into this kind of space. So, like I said, it has a common operation area, but there are different brands. So, one, two, three, four, five, six. They receive orders with respect to specific brands. All orders come in through the same order management system, then passed on to the delivery fleet, respectively. There is a case study of Rebel Foods from India. So, they used to own a brand called Fasos. Now, Fasos, despite being a physical entity earlier, it was known for food delivery. Almost two-thirds of the food volume through Fasos was based on the food delivery model. And about 75% of customers had never seen Fasos brand or Fasos outlet in their life. So the owners decided to convert the physical brand into a cloud kitchen concept. So they completely got out of the physical outlet space, and they have just focused on the online delivery since then, and rebranded themselves as Rebel Foods. And during that time, they also decided to add more menus. So fast foods was something which was very popular for their wraps, and they started a biryani brand and tried to put a premium at that brand because the fast food was more economical brand, but they were not able to sell a biryani. It's a dish of rice at a higher price than because it was coming under the same brand. Then they realized and they rebranded the outlet. They've called it XYZ the Biryani Life under the Rebel Food. So it came out as a different brand. Uh, People never realize that it is coming from the same company. Nobody knows about Rebel Foods, and now they claim to be one of the largest internet food company in the world. They have more than 200 plus outlets, cloud kitchen outlets across the country, and they have about 12 different brands under their portfolio. So like I said, this is example of multi-food. It is the same company which has 12 virtual brands. So that's what multi-brand concept cloud kitchen about. Next is shared space cloud kitchen. Now, shared space cloud kitchen is a concept which works with already existing brands. So here difference is, although the kitchen space is as large as multi-brand outlet, but in this case, each brand is given a separate kitchen space, which is dedicated to their type of operations. Also, beauty of this kind of a cases, so you can have say Domino's and McDonald's and Pizza Hut all sharing the same bigger cloud kitchen space. If I have to give an anomaly on this concept, if you know the kind of a workspace uh, we talk about, uh, so-called different offices being in the same bigger space. They have but common back of house facilities like a common reception, but there are different companies. They can be common, back of house pantry, cafeteria for all those companies. Even common meeting rooms they can book. It's very similar to that kind of setup. So in this case, the difference is only that kitchens are dedicated to a particular brand, because a particular brand has its own kind of a setup, preferable setup, because if say one brand is doing only pizza and they have a specific type of oven they want to use and specific type of flow, so those kitchens are dedicated to each brand. So this concept is also very popular, and because all these brands, when they plan to grow, they do not want to get into standalone investments, because if they do that, they will have to create their own back of house services such as cleaning, dishwashing. In this case, the preparation and cooking can be dedicated to a particular brand, but the cleaning and dishwashing can be a common facility. Back of house services can be common, aggregators can be common. So these kind of setups are with the modern infrastructure, best of the utilities. Now in this kind of space also, the economics of this shared space cloud kitchen is that you have high order volumes. Because of high order volumes, the same delivery person would end up delivering multiple brands in the same area. Hence, your per unit cost of delivery goes down. So this works very well in terms of revenue model for most of these brands. And so, as far as kitchen operators and the brands are concerned, the nature of transaction or a business understanding is very different in this case. Kitchen operators either charge a percentage per order, or they take an upfront amount from the onboarding the brand, and then charge them with a monthly fee. So this is something which is good for. So what we are looking here is multiple standalone brands housed in one single cloud kitchen. So the previous model which we have understood, the standalone brands which work very well for Domino's, McDonald's, Pizza Hut kind of setup, they can all be housed in one under one roof, and they can have their own different kitchens within the same roof. Now, all these type of setups are already compliant with most of the safety norms and food standard norms, and so it's very easy for new outlet to acquire business permits. So it doesn't take much time. It can be just bring your staff and bring your material and start your operation from the day one. So space already exists, so you can start a restaurant in a just 1 day's turnaround time. So this type of model works. However, in this case, the brand 1, 2, 3, 4, they can have flexibility of dealing with their own type of delivery uh, uh, service providers or aggregators. But preferably, everybody deals with multiple food aggregators because they over and all they have sort of economy of scales by one aggregator taking orders for all the brands. So this model is basically a cloud kitchen business investor. So there are a lot of companies which are flourishing in different parts of worlds. So Kitchen United is one which is based in US. There is another company called Karma Kitchen, which is based in UK. Now, these companies have come up with the kitchen infrastructures and they are renting out those kitchen spaces to respective brands. So they have the individual units or they have way of customizing those units as and when these brands come on board for the specific brands. So they work on these rental models. So Kitchen United is a California-based company which works very well. You can check up these sites in Google and understand about these concepts more. Now, fifth concept we're going to talk about is an aggregator cloud kitchens. Now, aggregator cloud kitchens are the kitchens which are being managed by aggregators themselves. For example, if I'm Uber Eats or I'm Deliveroo or I'm DoorDash or Zoomia Food, so I end up creating my own kitchen, cloud kitchen, and then ask brands to come and partner with me. Now, difference between this and the other shared kitchen space is that there is exclusivity. So you are bound to work with this aggregator. So you're not dealing with multiple aggregators because these are aggregator owned kitchens. Now, why these kind of kitchens have flourished? Because aggregators have control on the data, and they because of that data they are able to study the potential of a market, and they decide to invest into this kind of concept. They know this brand works very well. They have that catchment under their control, and then they ask a brand to come on board. Now, in this case, uh, there is no upfront cost for a brand to kind of start cloud kitchen operations. So they can very easily, it's more driven by the aggregator cloud operator, kitchen operator. So but the difference is there is exclusivity, and it's very similar to co-working kitchens. The typical kitchen type is about 220 to 300 square feet. There is no upfront cost required. In this case, they charge a higher commission, so which is usually around 30% or even more than that. So this is meant for all the existing restaurants. Like I said, the demand for these type of business models is created by aggregator kitchen. So let us understand this by an example. So Deliveroo, which is one of the dominant players in UK, ended up creating their own kitchens called Deliveroo Editions. So Deliveroo Editions, they created a lot of these kitchens and asked brands to partner with them, with the term that the deliveries and the order management will be exclusive to them. So whether they decide to work with an existing brand name or it is a completely virtual brand name, but they work with the same kind of staff or same kind of existing restaurant setup for those particular areas. Now, last is the operator managed cloud kitchens. Now, this is one of the latest concepts which has emerged. Now, in this case, the difference is that you are having the complete operations. Even the cooking of food and preparation is also hived off to the staff of operator managed kitchens. So basically, what you do is provide only the brand name and give the raw material and training to the operator staff. So in this case, the economics is little different because you're charging an onboarding fee and then paying royalty. So it's more like a virtual franchisee. So the way franchisee operations work in the physical space, you take the same franchisee model and put it on the online context. So that's exactly what it is. So it's like a virtual franchising, and it is meant for those restaurants which have no experience in running restaurant operations. So they can, but they have excellent idea, they have excellent cuisine, they can easily come on board and venture into a cloud kitchen without having to deal with aggregators or delivery operators themselves. So everything is left on the operator. Even the cooking and preparation is left on the operator. Example for this model is a company called Kitopi, which is a Dubai-based company. Now, Kitopi has about 40 different kitchens in Dubai, and they are taking orders from these brands, and they have their own staff which is preparing these meals and packing. And then they tie up with other delivery operators. It can be Uber Eats, it can be Deliveroo, and service the clients. Now, we've discussed about all these types, but there are a few challenges which uh, every cloud kitchen operator will face, or a restaurant operator will face. Is he has to keep in mind there can be delivery errors, so he has to invest into a kind of a very solid, robust technology stack to take care of those things. Ensure that he's dealing with the right kind of delivery fleet. You also have to ensure that you are able to maintain consistency over recipes when they are being created in different kitchens at different locations. uh, because you're not investing in the kind of supervising staff, because mostly it is provided by the cloud kitchen operators. Customer retention is also a concern, because most of the customer control is now with aggregators, because they're the ones who are managing orders. They are masking the customer information. They may decide to share it with you or keep it with themselves. That's totally dependent on them. Other challenge is that you do not have option, at least at this moment, you don't have option to serve alcohol. And we know alcohol adds, to a substantial amount, it adds to your revenue model. But in case of delivery, it is not permitted as of now. And you're totally dependent on food aggregators. You can have your own setup, but it cannot be as large. You can't have economies of scales if you are only dependent on your own aggregation model. These are some of the brands. I have segregated them. So if you see the restaurant kitchen operated, those are more of a single brand cloud kitchen uh, examples. The virtual restaurant providers. So Uber Eat has their own virtual restaurants. Deliveroo has their own virtual restaurants. Grubhub has virtual brands under them. And kitchen infrastructure providers are the companies like we discussed about the multi-brand kitchen outlet. So these are the companies who invested into the infrastructure, and they are renting it out to either the existing brands, or they are housing virtual brands inside their kitchen infrastructure. Then there are mobile kitchen operating companies. Now, solutions from Sheffield for ghost kitchens. Uh, we have been space of setting up commercial kitchens for about 18 years. We work with most of the well-known brands, be it Javas or art cafes, hotels like Sarova and corporates. So we've done vast amount of kitchen setups in terms of different capacities, in terms of different cuisine types. A great amount of experience. We understand this industry very well, and we know how it is critical for a kitchen to support the function, especially for a cloud kitchen kind of a setup. You have to have different methods for your storage and preparation and cooking. It cannot be same as your traditional regular restaurants. And also there could be a challenge of space. If you're talking about everybody has to fit in kind of a 300 or whatever space is given within the cloud kitchen space, or you have to create a cloud kitchen space and house maybe 6 to 10 brands within that. So what type of commercial equipments you need to create? And Sheffield is kind of a one-stop shop. We have our own fabrication. We can do a kind of a all built-in units with oven, burner, fryer fitted in one single unit. We can have advanced equipment like Rational, which can do multi-purpose cooking. So that's what Sheffield can help people who want to get into this business, either from the restaurant side or from the cloud kitchen operations side. We can serve all these kind of clients best. Typical layout of this is a layout of a multi-brand kind of an outlet. So each line can have a different type of meal. So say one can be a pizza type, other can be a plant-based meal, one can be an Asian type, one is dedicated for burger. But the common facilities like cold storage is common, the dishwashing can be common. So we're done with our presentation. I welcome your questions.
Fantastic. Do you want to, Vikas, stop sharing your screen? Yeah,
Yes.
perfect. Great. Thank you. We've only got 5 minutes, so just a few questions. We've had 110 people attend this, so it's fantastic, and a few comments and questions, which is great. So I'm going to give you 1 minute to answer each of these questions, just so we can be nice and quick. Sure. Bernard Ndegwa has asked, what are the chances for me as an individual with my own kitchen to thrive in this business as a brand that is not known by many people and have my own menu? So I guess he's an independent, kind of not part of a chain, and how he can kind of fit within this kind of, I guess, cloud kitchen or delivery-based kind of model.
In fact, this is the best time for people like Bernard to get into this space, because right now people are more attuned to a food delivery based model. They're not really looking at, I've personally seen all these brands thriving, doing well. Every time you go on a Glovo app, check, oh, there is a new restaurant which has come up. You really do not want to go out at this time and find out, and you will end up ordering food from them. So what you need to be good at is your cuisine specialty. So if you are good with the type of food you are making, then I think this is the right time to start a business, because people are not bothering about what kind of a shop setup you have, what kind of a brand name you have, what kind of marketing you have done. You really don't need to do much marketing apart from the online marketing. So it's very easy for an individual to get into this space. Now, let me add to that. Either Bernard can decide to start the setup by investing into his own kitchen setup, a small kitchen setup, or rent kitchens from other cloud kitchen operators. So this is the type of option you have as an individual.
Okay. Great. And then Abdallah Masood agreeing that it's a good concept for restaurant owners, especially under the kind of current pandemic. They just need to do a little bit of modification to their kitchens through expertise from the likes of Sheffield to create separation of storage space. I mean, less of a question, more agreement. But I guess Sheffield, on behalf of yourself and Sheffield, you can help consult different companies to kind of what solutions would be best for them, depending on what kind of setup they have or what they're wanting to achieve, really.
Absolutely. Oh, we have been in this space for a long time. Like I said, that the kind of kitchens we have worked with, we've not been only limited to, say, restaurant space. We've done hotel kitchens. And even in case of restaurant, there's another model which was doing very well, especially in Europe and US, is the pop-up kitchen model. So pop-up restaurant model. So you can have a centralized commissary kitchen, which can serve, say, maybe 10 or 20 different outlets, which are smaller. So you are preparing meal in a central location and then finishing the meal at those pop-up outlets. So yes, there are different models. I mean, Sheffield has been championing this concept of commissary-based and pop-up kitchens concept much before the pandemic hit us. Now with the cloud kitchen, I think it is far more easier because there is a acceptance from the demand side.
Exactly, and that kind of comes on to my question, the last one, if that's right. Cloud kitchen, ghost kitchen is I guess a trend that originally came from whether it's America or the Europe or wherever. And what we tend to see in Kenya and throughout Africa is that we adopt trends quickly because we see them work and they've been tried and tested in other parts of the world and they can be adopted. Do you see anything in a similar kind of kitchen-based, whether it's cloud ghost kitchen trends happening in the US throughout the pandemic in Europe, that you think will become more mainstream within Kenya? Cloud and ghost kitchens are very mainstream at the moment, but do you see any trends that are happening over in the US and Europe that you see Kenya adopting in the near future?
Yes. So the two type of concepts, the shared brand, the co-working kitchens, just like co-working spaces, and also the multi-brand outlets are going to become very successful. So at least these two concepts, but although these two concepts require larger investments, we have similar cases like the example I have given for Uber Eats, which has created virtual brands by renting out spaces of existing kitchens, here in Kenya, there's a company called Foodle Doodle, which has done something very similar. So at least these two concepts, I know for sure people are going to branch out. I mean, they might start today with a single cloud kitchen operation, which is very prevalent today, but they will eventually jump on board and get into these bigger kitchens. They become part of the bigger kitchens because you have those economies of scales coming with these two concepts.
Great. Well, look, Vikas, thank you so much for your words. Really interesting to hear, and it's great to hear the other side of the hospitality industry that some people don't even think exists, but it does in the shadows, I suppose, in the clouds.
Yeah.
But for everyone participating, thank you so much for joining. As I said, we've had over 100 people join, which is great. This is recorded essentially, so you can either click on the link that you registered on after the session, you'll be able to watch it back, or we'll also kind of host it on our website, on the Kenya Hospitality Event website, which you can just find on Google or social media. But yeah, Vikas, thank you so much. I hope you managed to get back home as quickly and efficiently as possible. And we look forward to seeing everyone at one of our events in the future. But thank you very much, and we really appreciate your time and words.
Thank you so much, Alex.
Okay.
Thanks
Bye-bye,
to
everyone.
all the audience who joined in. Bye-bye.
Yeah, bye, everyone.